Hello guys, hope you are doing well. Making a new trade recap video about a trade and a sell and yeah, the past few weeks I've been studying and reflecting a lot through my data, my journaling, and yeah, I've been talking with David and Matt for a few weeks and my style slightly evolved. I personally a little bit less aggressive than I used to be, just because I think it's just more scalable, in my opinion. If you want to take trades every day, of course it's up to you. But I personally, it suits better with my lifestyle, my goals, long term, all that stuff. I prefer to stick to high probability setups, so that's why I've been not posting so much trade recaps. For example, last week just took 4 trades. This week only took 3 trades, right? So is that I also been taking a lot of my time to study previous data from my markups, trades, all that stuff, improving my journaling. So I've been a little bit offline, and yeah, I think it's needed, even if it's just one time per quarter or one time per month, like reviewing everything, try to see patterns within your trading performance, what you are doing well, what you are doing bad, and yeah, try to improve. And when I look back, I was taking a little bit too much trades, in my opinion, and that comes back to a lot of topics that I would need to be here forever talking about that. But just to moving forward, I just want to explain that I'm slightly more conservative in my approach, which means that I personally don't take every single move, even though it's valid. I can just put, for example, the risk reward right on TradingView, forward testing, but I personally not risk my capital unless for me it's appropriate setup. Of course, even if you are even more conservative than me, if I take a trade that for me is conservative, for you it can be aggressive, right? So it will depend, but based on my data and the way I trade and the way I want to trade moving forward, I'm very happy with the style that I'm doing at the moment. A little bit more conservative, average around 5 to 7 trades per week. Last week took 4 trades. This week took only 3. And even one of them was a mistake, to be honest. So yeah, quite conservative, more than enough are in the end of the month, in the end of the quarter, in the end of the year. Yeah, thinking about scale and yeah, if you're trading large funds, you probably won't be trading every single day. So yeah, that's the goal, and you need to prepare right in advance. Don't expect to trading every single day, taking 10, 15, 20 trades per week, 16 or 50 trades per month, and yeah, and expect consistency, in my opinion. But yeah, that's just me. If you take that, if you like that style, yeah, it's up to you. I just can talk about personal experience. I can talk about anything else. And for me, even though you can be profitable, taking trades every single day, like it's a completely pain. Just do your journaling, review, like it's a pain, right? Yeah, not saying that I was taking 10 trades per week or 50 trades per month. Obviously not, but yeah, I like to be even more conservative than I was. And if I see a setup that's just valid, I personally let it go. Okay, for me, if I take a trade, in my books are almost high probability. Of course, not 100%. I can still take valid trades and I can still make mistakes. But according to my style, my view, my plan is more inclined to the high probability setup. If you have a different approach, of course, we can be discussing here all day. But if it's a high probability or valid, but yeah, for me I'm going towards the more high probability standards. But yeah, talking about the trade, my third trade this week, I only took 3 trades. And yeah, on the daily time frame here, going to analyze the charts, right? Otherwise, this will be very long. So on the daily time frame, I have here the swing high, right? The swing low. I personally don't classify this as a daily breakout structure. If you do, there's nothing wrong, because I don't use peep rules, right? I use discretion in terms of mapping swing structure. And what I like to do is jump time frames when I'm not sure. So for example, if I go to the 3-day time frame, for me, this is not a clean breakout structure. I want to see this clean, right? You can see here the clean push up, push down. Here again, you can see the clean push up, push down. For me, this is simply an internal, like this structure, right? It's not very clean as a swing, like it's just more like a chalk, right? So for me, even if you go to the 4-day, right, you can see that the big swing is more like this: the push up, push down, and push down again. So going to the daily time frame, we still in the discount, right? If you put premium versus discount, this is still the discount. However, I don't assume that this will be broken, right, until it does. So even though M15 was bullish, or even if the 4-hour chalk, right, if you count the inside bars, even if it's 4-hour chalk or M15 and M15 was bullish, I still don't classify it as the daily pullback has started. The daily pullback for me only starts when we have this is like the 4-hour. This is the 4-hour breakout structure, right? So when the 4-hour break to the upside was bullish, then I have the indication that the pullback from this bearish daily leg will start. Okay, before that happen, or until the 4-hour remains bearish, every single chalk or boss on lower time frames just indicates price is pulling back to then continue and making the lower high. Even though we can move to the upside, I will not assume the structure will change until it does. So I will still be looking for sells, expecting price go to the downside. Okay, so going to the 4-hour time frame. So 4-hour time frame, there were a few possible POIs, right? We have here the extreme, perfect, right? The extreme inducement here, very high probability, premium prices. We also have this week, right? If you use fractal refinements like I do to map supply and demand, you can see this week is very high probability. Not because you can see, for example, we can also argue that's part of this large flip, right? You have the push down, price react, right? Move to the upside and move to the downside. We also have this series, right, of mitigations. People like to call supply chain. We also have this sweep of liquidity. It's not visible on the 4-hour very well, but you can see, right, through the weeks that price swept liquidity. Especially, let me see, it's structural liquidity, which means price took out the low and took out the high. So yeah, for me this is very high probability in terms of the POI confluence. We also have inducement, right? And yeah, we're in premium. So for me these two POIs are place I'd be looking for M15 development, to look for sells, because like I said, I don't assume structure will change until it does. 4-hour is bearish, swing high, swing low, trying to call the pullback, the 4-hour lower high. Okay, something that I also want to talk about is you have here another POI, right? But this POI I personally was not very inclined to take, because first we have no inducement on the leg. This is why I put this box, right? And you also because you don't have inducement, it's just a straight push down, right? And you have all these POIs right above. For me, this can be very, I can easily see this being used as liquidity, right, to reach POIs above. So I was not interested in this 4-hour supply. I just marked these two. And yeah, I'm thinking if I need to say anything on the 4-hour. You can clearly see that you had the change of character, right, indicating that 4-hour will pull back. But until 4-hour boss bullish, right, this 4-hour chalk just indicates the pullback. It's on the 4-hour, not on the daily. So if I zoom out, right, only when this 4-hour boss bullish, that I can assume that the pullback of this, right, daily leg, the swing high and the swing low, the pullback will start. Until that happens, I will just assume the 4-hour will remain bearish. So yeah, price was around here. So put variable here, okay, and let's go to the M15. Okay, M15 time frame. When I see this on London session, let me go one more. One more, okay, yeah, here, okay, so I just mark here, right, for the M15 instruction, because I'm at this moment, I'm trying to call the 4-hour lower high. I will not be looking to buy, especially inside this M15, inside this 4-hour, this item frame supply, right? If you have, for example, a 4-hour supply, M15 is bullish, when price stops here and comes down, I personally not inclined to take these buys. It's very, very rare, to be honest. Of course, we can have a lot of different scenarios, but in theory, it's not a high probability, right? When price reach this 4-hour supply, I prefer to see this go, right, and then look for the buys. Otherwise, just look for sells. So I was not expecting taking longs from here, and I was just looking for sells. If I look left to see what price was reacting, we can see that you have this M15 POI using fractional refinement. Price was reacting to something, so increase the probability, right? Again, what we have here, we have a change of character. I will just use M15 chalk down, okay? So we know that when price reach a good area of value, the first sign that the boss will happen is the chalk, okay? So the first sign boss will happen, right? Is the change of character. So the change of character can lead to a break of structure when come from a good area of value. When for me, this is a very good area of value. So after the change of character, knowing where we are within item frame leg, I'm still not looking to buy, right? I'm just interested in sell at the moment. Okay, so let's study this price action. London Open was at this stage. We have two POIs, right, to look for sell. I have this POI, and I also have this POI, right? I look left, is not the most clean POI, but I can justify this being a very clean sweep. I'll just use this just to be more clean. If you notice, which increase a lot the probability of this POI, that was the sweep, the flip formed through sweep of liquidity, right? Which I really like. You can see that even if you go, for example, to M5, it's cleaner, right? You can see the sweep of liquidity. So at this point in time, I was looking for sells, right? And we have two POIs. In my opinion, even though this one was in a better area of value, right? If you are looking for this leg, this is higher. I think it's more high probability this one, because if price breaks above, what you have something like this, right? Price is moving down. When price drop bullish, right, and breaks this internal structure, we have the indication the high is likely to get run. Okay, so what you have here, we have the push up, the push down. This is for the chalk, right? You have the change of character, right? So when price move up and move down again, if you have something like this, you have indication that probably the high is going to get run. Of course, we can just then move back again on and make a M15 chalk, and we then assume the low is weak. But in theory, for me, it's high probability this zone to hold, because if price moves to the upside here and internal break structure to the upside, I can assume that probably the high is going to get run, because we have an internal structure aligned, right, with this M15 swing structure. So for me, I was very inclined to take sells at this moment, especially knowing it's a flip, right, formed through sweep of liquidity, and I also really like this trend line, liquidity, how price action formed. So I put here liquidity down. I will just go to M5 to clean up the thing here, flip, right? So here, going to the M1, my entry time frame, okay? What I have here, we have the sweep of liquidity, okay? We have the sweep of liquidity, and at this moment in time, the chalk is not here, okay? This is a change of character. Okay, so the entry time frame is the most simple part. Do not get caught in the trap of thinking entries are the most important, because it's not. You can see on all my trader recaps, entries is all the same. What is the most important is what I said on the daily 4-hour M15. Why for me this zone was high probability, why I don't take buys here. Like everything is on M15 4-hour is more important. And when I go to the M1, it's just for my entry criteria. Okay, so we have the sweep of liquidity, right? You can see here when I look left, right? I have here. Sorry, let me explain better. When I look left to justify this reaction, I can see this POI, right? So let me just. You can see this POI broke this high, right? So it broke something. It led to internal breakout structure. It's something valid that I can use, okay? So for me, it's valid to use as a possible flip, right? So when price moves to downside, I have here the fail reaction. Okay, this comes down as well to, let me see, low time frame, fail reaction. Okay, so you have the candle close below. So this comes down to you, how you want to approach this, because a lot of you wait for the candle close, which is fine. I personally use weak breaks, but yeah, that comes down how aggressive or conservative you want to be. Test and see by yourself. I personally use weak, but I know David and Matt use body, and it's perfectly fine. Both work, right? So just find what suits you better. So what you have here, you have the sweep of liquidity, you have the B shape, the mitigation, right? You have the flip, and you have the chalk here, okay? So if you can see the flip, right? Price move up, move down, move up, move down. So you have here this entire range. I don't trade like this, but if you want, you can just use the entire range, put a stop loss on the EQ and cover the high. If you want to be a little bit more precise, you can see that this was the extreme of the flip, right? You can enter here with 2 pips stop loss, and yeah, you get tagging. And I personally took this trade with 2 pips stop loss, and there was a few possible entries. I'm not going to lie. I personally use second time frames, but I also enter with 2 pips on the seconds, but and I end up entering right here with a little bit more confirmation, because I personally was not sure at this moment in time, and I decided to wait for a little bit more confirmation. And when I saw again another flip failed reaction. Again, I will repeat myself, I use weak breaks, so for me it's more than fine. You then have the sweep of liquidity, right? And after the sweep of liquidity here, you have another flip. If you use 2 pip stop loss on M1, you can see, and this can be a lesson for you, you can see price, you can cover the high, right? So what I like to do is, I like to cover a rule that I have, I try to cover every time the structure that is behind me. In this case, you can use, for example, is 2 pip stop loss, you can cover very good here, but you can still, if you want to cover this one and be a little bit more conservative, you can just put something here, right? Drag to the right, and your entry would be here, because 2 pips will cover you from this if price wants to mitigate something above, right? So yeah, it's up to you. I personally like to cover as much structure as possible, and yeah, that was the trade. And I personally took full volume at 10R, and and the reason why I also want to explain this to you is because if you like after the bros, right, what tends to happen? A pullback. You can see that, you can clearly see that we have here liquidity up, right? This is not the best area to get involved. I know I'm trading in the discount, right? So if you put premium versus discount, I'm trading here in the discount. What is the most likely thing to do? Price pullback to premium and then continue to the downside. This zone has no protection. I personally don't want to take volume left in this case because I have no protection, right? If I would enter here, it would be different, but in this instance, I prefer to take full volume at 10R, and yeah, price went to the downside. I personally don't care, and if I would leave, I will get taken out. So yeah, that's the trade. I know a few of you also were trying to take sales from here, but you just need to understand and zoom out. Focus on the real high probability stuff, because if you use premium versus discount, if you use all the confluence, right, this zone has nothing, right? Very weaky, this week coming against you, no inducement on the leg, discount, high probability zones above, liquidity here, outside, right, the structure, this range, right, is outside. We have here the move up, right, and the move down, this POI up and outside the range, right? It's not something very high probability, and yeah, I've been just more conservative. So 3 trades this week, 1 loss that was a few days ago, very low probability, very low probability, a mistake I took, then break even and this win, net 9%. So I probably will finish the week, and I'm not sure if I'll take any more trades this week, but yeah, that's why I've been trading more conservative, just focus on high probability stuff. For me, that was very clean. The reasons I prefer this zone instead of that one I already explained, and yeah, I hope you took value from it. If you like, let me know, and yeah, see you soon, guys.